Well, hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about all the cues for trade and, of course, important stocks to watch out for, given the fact that it's an important day when it comes to earnings. We have HUL and Infosys reporting their first quarter numbers today. And, of course, Reliance Industries will also start trading ex-Jio Financial Services. So we will be getting you more on that as well. And, of course, if you have any stock-related queries, send them in to us on our YouTube feed and we will have them addressed by our technical expert on the show. But before we do all that, as usual, let's take a look at the top headlines at this hour. Wall Street continues to rally as the Dow gains for the 8th straight day, driven by stronger than expected quarterly earnings. Asian markets, however, trade lower, while the GIFT Nifty is indicating a subdued start for the Indian markets. Well, the demerger of Jio Financial Services from Reliance Industries will be completed today. A special pre-open price discovery session will be held to find the value of Reliance ex-Jio Financial Services. In fact, Jio Financial will also temporarily be the 51st stock on the Nifty. Industry-leading revenue growth expected from Infosys as it reports its first quarter numbers today. FMCG major HUL, meanwhile, is likely to deliver 14% profit growth along with margin expansion. And among key mid-cap earnings to track, Havells, Persistent Systems and Coforge will be reporting earnings. And monsoon session of Parliament begins today. Opposition parties are likely to rake up the Manipur crisis. Among other issues, 31 bills are likely to be tabled during the session, including 21 new legislations. Well, let me bring on board then for our first guest for today, Hemen Kapadia of Choksey Securities, joining in this morning. Good morning, Hemen. Record close on the Nifty yesterday as well. Every day we are, looking at the index hitting fresh highs. Do you expect, 20,000 on the index anytime soon, probably early next week, if not this week itself? Hemen, is my voice reaching you?
A very good morning to Nandita. Thank you.
Yeah.
I guess didn't expect things to move as fast as it has, Nandita. But yes, I think 20,000, frankly speaking, is on the horizon. Now, does it happen this week? Probably, but I have a feeling by next week, okay, we have 2 trading sessions left for this week, Nandita. But I think by next week, that seems to be on the horizon. The only spot of bother, I wouldn't say a spot of bother, is over the last 3 days, the VIX has moved up just a bit. I mean, it's not at all a concern yet. I would be, slightly more concerned if it crosses 13.25. We are still at 11.6. But otherwise, yes, I think 20,000 is on the horizon, Nandita. And once again, didn't expect it so fast, but yeah, we're on course.
Right. Hemen, before I move forward and talk about specific stocks, I want to talk about Reliance Industries, given the fact that, Jio Financial Services will demerge from Reliance Industries today. Let's quickly go through what one needs to watch out for and what one needs to know about this, the special trading session that will, in fact, open trading session that the exchanges will be conducting from 9 a.m. today. Well, the price discovery session, as I mentioned, will be between 9 a.m. and 10 a.m. This is because Jio Financial Services is being separated out of RIL as a separate entity. Markets will open at 9:15 as usual, but Reliance Industries stock will not change in the Nifty or anywhere else till about 10 a.m. So basically till 10 a.m. Reliance Industries will quote at a fixed price, that is at yesterday's closing price, and the price discovery session will be over at 9:45 a.m. and then from 10 a.m. Reliance Industries will start trading ex-Jio Financial Services. Now the price or value of Jio Financial Services will be taken as the difference between RIL's closing price yesterday and the discovered price of Reliance in the special price discovery session. And Jio Financial will be included in the Nifty at that fixed price. So Jio Financial will temporarily be the 51st stock on the Nifty index, but it will be removed from the indices 3 days after it lists. So Hemen, of course, Reliance Industries has started participating in the rally. In fact, it has hit a fresh 52-week high as well. What's your outlook on the stock now that it has, started performing, or in fact started participating in the rally that we've seen in the markets?
Well, frankly speaking, Nandita, it was about time Reliance played catch up. It spent almost 20 months moving sideways and consolidating. And whenever Reliance takes so long to consolidate, it gives phenomenal returns later. So I think that's what we're on course to do. 2856 was the all-time high Nandita posted somewhere last year. and we've come within striking distance of that. So frankly speaking, I think we came to that yesterday. So we've come to its earlier all-time high. And okay, I'm not exactly sure what the price discovery for Geo Financial Services is going to be. But on pure technical, if I just look at what is as of now still Reliance Industries, I believe in the next 6 months, Reliance is headed towards somewhere between 3,300 to 3,450. 3,450 is my target for Reliance. But once again, now once Geo Financial Services is demerged, that would obviously change and a combined entity would have this thing. But yes, I think on charts, Reliance is looking good. And like I said, after 20 months, if Reliance wakes up, sentiment-wise, weightage-wise, and yes, like I said, whenever Reliance takes so long to consolidate, it gives a superb return after that.
All right, hold that thought, Hemen. We'll come back to you and talk about specific stocks. But let me also bring on board Kaustubh Pawaskar from Sharekhan by BNP Paribas joining in this morning to talk about what to expect from HUL's first quarter show. Now, good morning, Kaustubh. Good to have you on the show. It is expected to be a quarter of rebound for some of these FMCG giants when it comes to volume as well as margins. But revenues could be a bit muted. What are your own expectations from HUL this time around?
Good morning, Nandita. Good morning, viewers. For this quarter, we are expecting around 8.5% revenue growth for Hindustan Unilever. You correctly said that this time the revenue growth will be little moderated for consumer good companies, and there is a reason that the company has taken price cuts to pass on the benefit of decline in the raw material prices. And because of that, we might see little moderated revenue growth. But from volume growth perspective, we should expect, sequential volume growth to improve in this quarter. So for HUL, we are expecting around 8.5% revenue growth. For soaps, we are expecting around mid to high single digit growth. For home care category, we are expecting low double digit growth for this quarter. And we have seen that company from quarter 4, they have start giving price cuts in soaps and detergent category, and because of that, we should expect a little moderated revenue growth. From volume perspective, we believe that volume growth would be much better in this quarter. As I said, raw material prices have corrected, so we should expect around 170 to 100 bips improvement in the gross margins. However, in terms of operating margins should improve by around 60 to 70 bips. There are two key reasons for it. Ad spends are expected to move up, and on the other hand, there would be 40 to 50 bips impact of increase in the royalty charges. So we should expect around 60 to 70 bips improvement in the operating margins, and PAT to grow by around 12 to 13% for this quarter.
Right. There's a new man at the helm, of course, when it comes to HUL, Rohit Java. I would want to know, what are you expecting from the management commentary this time around? Demand as well as, threat from El Nino. What are the kind of, commentary that you would be watching out for when it comes to HUL?
Right, so demand has been quite muted, and for HUL, the important factor is the recovery in the rural market. So we have seen the monsoons have been little delayed, but July was quite good, and as of now, the monsoons are quite spread out. There are certain pockets where we are yet to see, some bit of recovery in terms of monsoon, but it is well spread out. If monsoons remain consistent over the next 2 months, we should expect good bit of recovery in the rural market. Also, this is going to be the year prior to the election year, so we should expect even government providing some incentives to the rural economy. So overall, we should expect rural growth to rebound, or rather improve from quarter 2 of FY 2024. In Q1 also, it will be better, but on the low base, we have not seen any substantial improvement as such in the consumption pattern, but the actual consumption will start seeing improvement from quarter 2. So I believe the similar kind of commentary we should hear from management. From margin perspective, I think the commentary should be little good, because raw material prices have remained lower. So I think those benefit should be there for most of the companies, including HUL in the quarters ahead. And obviously, from strategy perspective, we should expect a lot of things to be spoken about. Their focus on innovation and expansion of the reach. Also, in terms of consistently gaining the market share in some of the key categories. So that is something which which HUL has been talking about, and I think that should continue considering their market development strategy.
All right, that's something that we'll be watching out for from the management commentary. But let's also talk about the stock price and valuations as well. HUL on a YTD basis is up somewhere around 4% or thereabouts. Vis-a-vis an ITC, of course, we've seen a 40% up move on ITC when it comes to this year itself. So would you say that there is a bit of a headroom for valuation upside when it comes to HUL vis-a-vis ITC?
See, HUL has always traded at a premium to ITC. ITC, if we look into the performance, prior to around 12 to 18 months, the ITC was reeling under certain pressure, and even the stock price momentum was not there. Post COVID, we have seen a good bit of recovery in its cigarette business. Hotel business saw a strong recovery post COVID. A non-cigarette FMCG business have seen excellent performance. We have seen its margins heading from mid single digit to high, low double digit kind of a margin, which was something the company was focusing on. And now if we see ITC's FMCG business margin improving towards mid-teens, I think the valuation would further improve for ITC. So that valuation gap between HUL and ITC will narrow, with ITC performing well. We should also expect HUL to do well if they see a good bit of recovery in the overall demand in the quarters ahead. So even HUL will do well, but ITC would continue to perform well, and we believe that gap should narrow in the quarters ahead.
All right, the gap between ITC and HUL valuation is expected to narrow in the quarters ahead. With that, Kaustubh, thanks a lot for taking out time and joining in this morning and sharing your thoughts on what to expect from HUL this quarter.
Thank you.
Well, with that, let's go back to Hemen and talk about specific stocks. Hemen, Infosys expected to report earnings today. Of course, it is expected to, in fact, outshine its peers when it comes to dollar revenue growth. It's expected in the range of 0.8%. And if you look at the margins, EBIT margins, they're likely to be flat, somewhere around 21% or thereabouts. Profit expected to grow somewhere around 1% on a QOQ basis. And when it comes to CC revenue growth, that's also expected at around 0.7% ahead of peers, because Wipro has, of course, handed in a negative CC growth of minus 2.8%, and HCL Tech as well, 1.3% degrowth. How should one look at Infosys now, given the fact that we've seen a very strong rally coming on some of these IT giants, and they've literally recouped all the losses that we saw since mid of Feb? Is it time to buy on every dip?
Very, very valid point, Nandita. You're absolutely right. It was one of the weakest links in the entire IT sector, but like you said, it's more than made up for what it hasn't done. And there's almost a complete U-turn as far as technical is concerned, like from one of the weakest stocks and making up lost ground, and now it's looking better. So I totally agree with what you said. I believe time is right for a buy on decline as far as Infosys is concerned. We've entered a medium-term uptrend. The long-term picture probably needs a little bit more time correction, not price. But yes, if the stock has entered an intermediate uptrend, and yes, every decline now, Infosys is a safe buy. The setup has, like I said, done a U-turn. Looks much better now.
All right, of course, looks much better after the kind of recovery that we've seen in some of these IT stocks. But I think we have a query coming in on LTI Mindtree, which of course has been a new entrant on the Nifty. Kishore Kumar wants to know what's your take on the stock. He's holding, the shares, and he's already, I think, losing somewhere around 3% or thereabouts on the stock. Would you advise him to exit on any rally, or should he hold on and wait for the long term?
Well, if it's a shorter term view, frankly speaking, he would probably need to exit. But if it's a medium term or especially a longer term view, I would say hold. If you look at the Nifty IT index, Nandita, there's been a complete turnaround. Okay, we've been riding piggyback on Nasdaq, which probably turned 2 or 3 months ago, and now we are sort of riding on its coattails. But entire sector, whether it's TCS, Infosys, everything. So LTM Mindtree, I don't think is going to underperform. And yes, hold on. Currently, the support at 4,800 from a slightly longer term point of view. And it's a very interesting thing. We've also had significantly higher volume. The month is not yet over, Nandita. And if I can check correctly, this is not delivery marking, but gross volume, as far as LTM Mindtree in the current month is concerned, is probably highest in the last 5 years. So I believe stronger hands have bought. Technically, the setup has improved. Technical setup of the entire IT index has improved. So if it's a slightly longer term view, please hold.
All right. Well, hope that answers your query, Kishore Kumar. Let me also talk about some of the banking stocks then. Federal Bank, of course, it has launched its QIP, and the QIP floor price is set at somewhere around 132.5 rupees a share, 132.5 rupees a share. That's at a very slight discount to yesterday's close price. Some of these banking names like Bank of Maharashtra yesterday reported a stellar set of numbers. We saw, the reaction coming on the stock price as well. And of course, we have a query coming in on SBI as well on the feed. I could see somebody posting a query. Sapna Singh wants to know your thoughts on SBI. So from the entire banking lot, of course, when large cap banks are concerned, SBI is one that there's a query on. But between Federal Bank and Bank of Maharashtra, which one looks more promising at the juncture?
Federal Bank and Bank of Maharashtra. Oh, okay, Federal Bank, we spent almost 8 months, Nandita, consolidating. I mean, in a good way, consolidating. It's consolidating after it's had a run up. So I would say there's a continuation pattern. And post this issue now, a close of a 140 should trigger off an upside as far as Federal Bank is concerned. Now, the Bank of Maharashtra that you mentioned, most of the PSU banks, I believe, have a lot of upside left. And like you said, after yesterday's numbers, we're at 33.30 as far as Bank of Maharashtra is concerned on yesterday's closing, Nandita. I have a feeling if you have a 6-month time frame, this should gravitate towards 46. So percentage-wise returns, you probably make more in Bank of Maharashtra because it's a smaller stock. Both looking good, but Bank of Maharashtra, as of now, looks better.
All right, Bank of Maharashtra looks better. Let me also talk about Canfin Homes. It reported its numbers yesterday, 13% rise in profits. It's in fact managed to top street estimates. And this morning, we have some brokerage views coming in on the stock. Morgan Stanley has maintained an equal weight rating with the target price of 640 rupees a share. And, it believes that the profit estimates have, in fact, has topped estimates by 9%, led by higher margins and lower operating costs. Jefferies, on the other hand, once again, a buy rating, but a target price of 850 rupees a share or thereabouts. How would you, play something like Canfin Homes? What is the kind of target you will be setting out for this stock over the next, say, 3 to 6 months?
I think I would probably, on technical parameters, Nandita, I would agree more to what Jefferies has been saying at 850. Once again, we've been consolidating for almost 22 months in a range between 420 on the downside, 720 on the upside. Now, last month, we gave a breakout and we've sustained. So, as of now, we've posted a fresh all-time high, clear blue skies, no known resistance levels. So, I would say 850, what Jeffrey says, and probably even more. So I would say something closer to 4 figures. But yeah, it has gone up one way over the last, 13 weeks or so. So I wouldn't say it's a fresh buy. There's obviously no question of shorting the stock. But if I were to buy fresh, I would wait for a small correction to come in to make the risk-reward ratio more favorable.
All right. That's the view on Canfin Homes. Let's talk about, Tata Power. We have a query coming in from Hemant. wants to know your thoughts on this stock. For the longer term, how should one play this one, Hemen? Tata Power?
Well, nothing is wrong with the stock, Nandita, except that it corrected for 13 years. And after the 13-year correction, it went up 10 times from 27 to 297. Normally, I would say out of 10 times, 8 times, if a stock goes up like this 10 times, you would expect a 1.5 to 2 year correction. Time and price retracement, consolidation, whatever technical term you give to it. So that is exactly what is happening to Tata Power. We've been correcting for almost 14, 15 months now. I believe maybe there could be a little bit more time left. But if I were to take a longer term view and have a view for 2 years or more, I think it looks like a great opportunity. It's consolidating after a brilliant run up. We're at 219. I believe you should get 50, if not 75% returns from the current price over the next 2 years or so. So it's a buy on declines. I'm not sure if the picture changes radically from here and starts moving from here. But yes, it's a bull market retracement. The overall setup is great. But like I said, if it goes from 27 to 297, you can't run 2 marathons in a row. So it's taking a pull off.
All right, that's the view on Tata Power. Buy on declines is the call. Let's take up a query on ITC. I know I was talking to Kaustubh about the FMCG space, but this query is coming in from Vikram and wants to know where ITC is headed from here. Of course, it is perched at a fresh 52-week high, somewhere around 480 levels or thereabouts. You know, it's just a matter of a couple of sessions. Would you say that the stock will hit the 500 mark?
Yes. Slightly more than a couple of sessions, yes, but you're absolutely right, Nandita. We are heading towards the 500 mark, and it did nothing from 2017 to 2020 odd. So it spent 3.5 years underperforming, and now is playing catch up and doesn't seem to be in a mood to stop. All-time high. So yes, totally agree. So a few trading sessions, yes, maybe a little bit more than a few trading sessions, but 500 is coming.
All right, that's the view on ITC. 500 could be on the cards sometime soon. The next query is coming in from Madhu. Wants to know your thoughts on Kirloskar Brothers for the next 4 to 6 months. This stock, I think, over the last 1 month has given a very good 15 to 16% return, but hasn't done much in the last week or thereabouts. Like I think 20 odd bucks away from 52-week highs as well. What would you advise investors to do if they have a shorter or 4 to 6 months kind of time horizon?
7 months, and the stock moves from 290 to 720. So the technical setup is fine. Tad bit overbought, yes. Any reversal signs? No. Important levels breaking on the downside? No. No known resistance levels, all-time high. So looks good. I would suggest a hold. If you're buying fresh, once again, I'm slightly conservative. If the stock goes up from 290 to 720 in a few months, Nandita, I'd say wait for a correction. Okay, markets like this, it would seem slightly silly to wait for a correction because nothing seems to be stopping. But yeah, and if you do like the stock fundamentally and you do want to invest, do it on a piecemeal basis. Let's say you buy 1/4 or 1/3 at this level and add in it's if and when the correction comes in. Setup is good. It's just that it's more one way, Nandita.
Right, the setup looks good. Hope this answers your query. Let's take up a query on Heritage Foods. A couple of queries coming in from, on this counter from Madineni Lakshmi and Mani Shankar. Both of them have the same query. In fact, Mani Shankar holds, Heritage Foods at 136. He holds 2,000 shares for the long term. If you look at this stock, it's somewhere around, once again has been a high flyer this week, 8% up. Would you advise investors to hold on or, maybe look at exiting on every rally?
No, firstly, congratulations to the investor to making a great purchase at a great price. I'd say hold. We are heading towards 280. Okay, it has been a sort of late bloomer, but it has bloomed and I believe it's going to bloom further. Hold on, 280 is coming. And if it sustains about 285, you'd probably see more upside, but 280 seems like a safe bet. Hold as of now.
Well, a hold call on Heritage. Hope that answers your query. With that, I think we've come to the end of this query segment. But Hemen, before I let you go, what are your stock recommendations for our viewers this morning?
Okay, I have 2 stocks. They're positional. They aren't exactly sort of intraday. Firstly, a buy call on PVR Inox. I know slightly combustible and volatile, but nevertheless, medium-term bottom in place. One can buy PVR Inox as 1435, stop loss 1415, target of 1475. The second stock is SBI. I mean, can't miss out on PSU banks, and since this is very popular and FNO stock, so one can buy SBI at 600, stop loss 580, target 640. I believe it's a modest target, and it should and probably will overshoot the target. Nandita.
All right, SBI and PVR buy calls on these two stocks. Of course, it's a positional trade, not an intraday call. With that, Hemen, thanks a lot for taking out time and joining in this morning and also addressing all of your queries very patiently. Well, we've come to the end of this edition of Morning Trade. But of course, don't go anywhere because coming up next is opening bell. So from me and the entire team, thanks a lot for watching. Stay tuned for the next show.